developments, most of which, the more interesting ones, will certainly affect our business, world trade, and everything else. And by default, of course, world currencies. Today we're going to tackle a topic which is slightly esoteric. Esoteric in its origins and in its complexion, but certainly not esoteric in relation to all of our lives. No matter where any of us live, whether we live as I do in Manhattan, as Adinda does, who hosts us in Indonesia, friends of mine around the world, and yours, I'm sure, in Singapore, in Finland, in Malaysia, South America, wherever you are. Today's topic is of, if unknown, largely, but very important impact on all of us: world trade. And what do we mean by world trade? I mean, world trade is hardly a new invention. The Greeks, Athens, used to support themselves with the long walls protecting, that's the walls from the city of Athens to the port of Piraeus. Forgive me if I pronounce that incorrectly for any of us who speak Greek, which I do not. So that they could import grain from the Black Sea. This is 400 BC. Rome, in its imperial height, had over 1 million people, and the grain for the emperors and the populace, what is that? SPQR, Senatus Populus Romano. The Senate and the people of Rome came from Egypt. So global trade is not only a function of human civilization, certainly organized human civilization. It's also an indicator of the state of civilization. After the Roman Empire collapsed, at least the Western Roman Empire collapsed, trade for the West, Western Europe, fell like a rock. Trade, international trade, whether it be in Roman roundboats, Viking longboats, or Panamax and Super Panamax and Cape Max carriers now, is an indicator of the organization state of, you could say, global civilization. So before we start looking at the specifics of some of the specifics anyway, it's a lot harder to find good information, or not good information, good charted information on, and up-to-date information on global trade for obvious reasons. It's an international endeavor, and there really isn't any specific organization charted taken, like you might say the United States' government takes care of its statistics, or China's government takes care of its statistics. So you get a lot of variety in statistics, but you depend on the World Trade Organization, the IMF, and other global organizations that amass some of these figures. This is one chart we're looking at. It looks like global trade indicators. Look at this. This is from Morgan Stanley, private company, of course. Morgan Stanley, an investment house here, a stockbroker here. For 2016, global trade indicators have skyrocketed. Now let's take a look at another one, just to give you an idea of what we're talking about. And then we will start with some of the specifics here. Okay, so here we have another one. This is from the United Nations and the World Trade Organization, which shows a rather different. Now, again, this is a little bit out of date. It only goes to the first quarter of 2015. But it shows a different view, or at least a different time view. So what actually are we talking about, and what is the relevance for us? First, we're going to deal with some of the generalities of world trade, such as we can. And then I'm going to talk about the two specific, how should we call them, potential conflicts or incipient or hardly incipient, active, but in their early stages, conflicts and threats to world trade, and why I think that they are vastly overstated as far as an actual threat to the growth of world trade. Now, that's not to say, of course, that world trade, because of its volume and importance, has become a major preventative of international dispute and, if you will, international conflict. That was the prevalent view, or it was a very prevalent view, maybe not the prevalent, a very prevalent view in the years before the First World War. You can still search out and find various opinions written in those days that the interconnectedness of the world in those days, pre-1914, pre-August 1914, would prevent, obviated a return to global conflict. Of course, that did not turn out to be true. And the countervailing forces of nationalism, tribalism, if you will, ethnicism, whatever you'd like, proved to be far, far stronger than the need for global trade. I think that's probably something which remains true. It depends which of our natures as humans is excited over a reasonable period of time. There's nothing that's more dangerous for, I think, global politics than a prolonged period of economic instability or decline. Because if there is one thing that registers with populations, and we have seen it this year, and we're going to see it, I think, in 2017, we'll be talking about that in a minute, it is the political impact of economic variables over time and on large sections of the population. Certainly one of the reasons Donald Trump was elected in the United States was this economic dissatisfaction. Certainly one of the reasons behind the British vote to leave the European Union is economic dissatisfaction. If the French vote in Marine Le Pen or give the National Front a strong showing, one of the reasons will be economic dissatisfaction. Same in the Netherlands, although maybe specifically there's a little more because the immigration issues in Europe are at least partially, and more than partially, I think, economic issues. And the same in Italy. Italy has not grown economically since the advent of the euro. People notice this. It takes time, but as your standard of living declines and as your culture loses its flexibility, money grants, among other things, flexibility, and as your children's future looks like it's something you can't protect, politics notices, and it has noticed in all of these countries. So global trade is, and the volumes of global trade are a great benefit, but they also are providing a source of instability. And so we're going to try and deal with both of those topics here. Okay, so let's take a little bit of look at global trade. Global trade is not an easy one to get a hold of. So one of the ones I use, and many other people too, is this index called the Baltic Dry Index. What does that mean? Well, it's a bit esoteric, which I kind of like. So it is a index of shipping rates around the world for bulk dry carriers. That means not oil. It means not liquid gas. It means ores, basically raw materials. Iron ore, coal, grain are the big ones. It's put together, I actually looked it up because I wanted to see exactly what I was referencing here, and so I will tell you what it does. Specifically, let me just find it here. The Baltic Index weights the shipping rates of various classes of bulk dry carriers, merchant ships. And it rates them in 4 sizes. You got to love the names of these things. The smallest one is called handy size. I don't know where these names came from. I could research it, but I didn't. That are ships gross dead weight of 15,000 to 35,000 tons. They compose 34% of the world's merchant fleet by number. The next size is called Supermax, 45,000 to 59,000. To get some sort of reference point on this, these are tons. A sailing ship, a large sailing ship, large military ship from the Napoleonic Wars would have probably between 1,000 and 2,000 tons. A frigate would be down towards the 1,000 side. A line of battleship, a 100-gun ship, might be 2,000 tons. As the 19th century progressed, of course, sizes got larger and larger. But there's a limit for wooden ships on how large you can build because of the tensile strength of wood. And I think the limit probably was reached at about 4,000, but I'd have to check that. Once steamships came in with metal construction, sizes began to go up and up and up. By the time of the First World War, battleships that fought at, say, Jutland between the Germans and the British were around 20,000 tons, if I remember, maybe a little more. By the time of the Second World War, battleships were at the size, I believe the Bismarck, the German ship that the British sank in 1940, I think, was 35,000 tons. The Yamato, which was the Japanese battleship, which was sunk by the Americans, was, I think, 60,000 tons. A current aircraft carrier for the United States is about 100,000 tons. So the rest of the size, they'll give you a reference as to both of the increase in size as technology improves, and also a current reference. So the handy size, which is the smallest, is 15 to 35,000 tons. The Supermax is 45,000 to 59,000 tons. Those two sizes, the two smallest sizes, compose 71% of the world merchant ships by number, but they only carry 18% of the dry bulk traffic. The next size is called the Panamax, and I think you can figure out where that name comes from. It means it can go through the Panama Canal. And that is 19% of the world fleet, and it carries 20%. So the three smallest sizes, 80,000 on down to 15,000, only carry 38% of the world dry bulk cargo by volume. The last size is called Cape size, and I think you can figure that out as well. The route being around the Cape of Good Hope in Africa, not through the Panama Canal, and it being the route between Asia and Europe and the United States. And that is 10% by number, 100,000 and up, and it carries 62% of the world traffic by volume. So we're talking about ships. Anyway, if anyone is interested in this, there is a great book by an American journalist called John McPhee about shipping. I'm gonna, if you give me 1 second, I'll come up with the name for you. I don't remember it offhand. But it is truly a great book. God, he's still alive. He's 85 years old. I'll tell you in 2 seconds what the name is. It's a truly great book. And it gives you an enormous sense of what it is like. One book is In Suspect Terrain, but Looking for a Ship. That's the book. 1990. I recommend it very, very highly. It will give you a real sense of what this industry, the seafaring industry, and the seafarers who man it, is like, and what it's like to be on a ship. I remember when I was younger, I wanted to take a merchant ship someplace. I didn't. We all fly everywhere. But the time frames are very different as far as how far the travel is. I actually I have a house. We have a house in an old whaling village out on Long Island here called Sag Harbor. And our house is very old. It was built in the 1840s by whalers. And the whole village is like that. It's very interesting. So there's a real sense of tradition live for the ocean and the sea there. And it's very interesting. Anyway, not to tell you too much about that. So I recommend that book very, very highly. Looking for a Ship, John McPhee, 1990. So the Baltic Dry Index that you're looking at here is an indicator, but it's an indicator of more than one thing. It's certainly an indicator of world trade. As rates go up, there's more ability for shippers to charge, and vice versa, of course. But it is affected rather dramatically by two factors, and I'm going to show you them right here. Okay, one of them, of course, is the cost of bunker fuel. Bunker fuel is the fuel that ships use. And you can see that this is a chart of the Baltic Dry Index and the cost of WTI. And I would say that the chart has less actual correlation than is shown on the chart. It appears to be, certainly in this period right here, from 2008 before, highly correlated. But I have my doubts about that because both of these are tied quite directly to the economic health and strength of the world, if you will. And so they can easily move in times which have very little, which are not directly correlated. But because if that were true, then as the WTI went off, you'd see a decline in the Baltic Dry, which you do, but back here, you see a decline and a rise back for WTI, and you don't see much of a change through here for the Baltic Dry. And here you have this very steep fall from over 100 over here on this scale down to the 20s right here, and there's very little change in the Baltic Dry. So although this affects the cost of fuel, it's not a great correlation between the two. The other thing that affects the cost very, very dramatically are the number of ships out there. I mean, it takes a long time to build a ship. So if you were here, if you're a ship owner here, a shipping company owner, and you're looking to expand your fleet, you say, oh, wow, things are looking great. World trade is up, the Baltic Dry is up, rates are very high, let's build ships. Problem is, build a ship in 2006 or 2007 or 2005, takes 2 years and more to build a ship, depending on the size. And suddenly you are faced with a world where your rates are hardly conducive to profitability in shipping companies. So it's almost like making movies. You put it out there, you really know what's going to happen because of the long lead time in the business. So there's more involved here than simply the direct relation to world trade volumes and world trade. But for this period here, once you get this bubble, I mean, everything is so distorted for this 5-year period right here, that once you get the stability in the supply of ships, you get a program which looks more like this right here. So the Baltic Dry Index is used a lot, but not mostly by economists. It's not something you hear a great deal about as an indicator of world trade. You can assume a number of things. If rates are going up in this period here, You can assume one, possibly world trade is skyrocketing. In fact, it wasn't. It was going up. It wasn't skyrocketing. But what you can assume is that the supply of ships was probably much diminished. So again, it has some use, but not a whole lot. Okay, so let's take a look at this is global trade volume. From 2000 to almost 2016. Now, as I said, the one issue with statistics out of this, they tend to be a little behind what we're used to because it takes a long time to amass these statistics, and they're done generally by international organizations, not by national organizations. So here, we have the volume. Surprising, remember, this is year-over-year change. So this huge spike here relates as much to this drop as it does to any absolute value of world trade. And we have, that's always true, year-over-year statistics. The more interesting value and the more interesting calculation for this graph is the median, right here, the dotted line. And you can see there that the annual grade volume median calculated from this particular graph is about 5%. You can also see that for the period from 2012 on, unlike this period from 2004 to 2008, and this period back here as well, there was another recession right here. That was why this went down. Global trade has been growing below par, below the median average growth rate for this chart right here, but also going back a good deal further. So there has been a change in the complexion of global trade. Now, the source of this is going to be a source of question. So let's take a look at some of the information that we have on this stuff. Okay, this is volume of merchandise exports and imports by region. Through 2015, source the World Trade and the United Nations. Excuse me. And you can see we have North America in blue, exports, North America in blue, this one right here. Part of this over here is going to be oil. We have Asia. Okay, this is volume. South America, Europe, and others, everybody else. Okay, that would be most emerging market countries are down there. This is imports. North America, dark blue, right here. South America, Asia, Europe, and other regions. Now, what's the most striking piece of information from this chart? And it relates to our topic specifically. Well, from my mind, it is the very unimpressive slope of the European graph. That's the green. North America, pretty strong growth. North America, pretty strong growth, right? Everybody, except for actually Europe. But I'm focusing on Europe specifically because Europe's part of our topic, the second thing we're going to talk about. South America and others. One thing that does seem interesting, and now remember, this is volume of merchandise, so it's going to involve oil as well, okay? Okay, anyway, Europe, that is not a dynamic economy. And how does this relate to our topic? Well, Britain voted to leave the EU. And whatever ideas you think were behind that and whatever issues were behind that, certainly one of them was the difference in dynamism between the EU, the EMU as a whole, and the British economy. For many of us, and I would include myself in this analysis, this group of analysts, one of the major differences between the two economic areas, Britain that is, and the European Union, or specifically, but more specifically the European Monetary Union, is the degree of regulation. One of the issues behind Brexit, there are others, of course, maybe more important, was the submission required as a member of the EU to Brussels, Brussels being shorthand for European Union regulatory bodies in Brussels, to the Brussels regime, if you will. The people who supported Brexit and the British departure were very adamant. And in this, I think they're correct, in that the British national government, as a representative of democracy, the British people, have very little say in regulations coming out of Brussels, which can have an enormous impact on the British economy. So that's one of the issues behind it, but we'll deal with both of those issues in a second. Okay, here's some more world trade. This is from a website which I can recommend. It gets a little wild sometimes, but a lot of their analysis is good as an antidote to the standard types of analysis that are coming out. They are pessimists and alarmists by nature, and it does some good to be pessimistic and alarmist by nature sometimes. Okay, this is a world trade volume, again, only to the end of 2015, but as you can see, there is a decline. One of the striking, maybe the most striking fact in this graph, and the others as well, is the very pronounced rise from left to right on your chart. That means world trade volume has been on a tear for more than almost 20 years now, and actually more. More and more trade goes around the world. We were buying a waffle maker over the weekend, actually 2 weeks ago. I bought it for my kids for the holidays. And there were, one of them, the one I bought, only because I didn't have the other one, is from an Australian company called Breville. Until quite recently, I would say about 10 years ago, Breville's market was Australia. I don't know anything about the company or its leaders, its executives, who made the decision, quite obviously, to take it globally. But they've been enormously successful. When I look to buy tools, power tools and hand tools, much of what I buy, they may be American companies, but if they're American companies, you can almost be sure that they're made in China. If they're German, they're probably still made in Germany. And if they're Japanese, they're probably still made in Japan, although less so with the Japanese. So it's interesting which economies and which nations and which corporates decide to outsource and put their things overseas. To take the difference between Germany and the United States, there is a more deliberate, I won't call it a policy, but a worldview. I use, one of my tools is a sander. I do a lot of work around the house. And it's from a German company called Festool. It's brilliant, but it's made in Germany. When you go to buy an American power tool, another brand that I use is a brand called Milwaukee, named for, of course, the Milwaukee in the city in Wisconsin. Most of their power tools are now made in China. Their quality is very good, but they have chosen to move their factory to China, whereas the Germans have not, in this one particular instance. So there is a difference, and this leads to our second topic, of course, or our second consideration, and that is the impending, if you will, dispute between China and the United States over trade. This is world trade on, this is an interesting chart here. This is world trade volume from the world, I think this is, let me see who this is. Let me put it up first. I believe this is world trade. This World Trade Organization, you know, the GATT, the Tariffs and Trade Organization. And the thing that you can see is, of course, the trend from 1990 to 2000. 1990, of course, is the beginning of the Chinese miracle. I'm calling it a miracle in economic terms. I am not passing comment in any other fashion. But in economic terms, it is absolutely a miracle. No nation's ever done on the scale and with the speed that the Chinese have. Now, you can say that the Japanese under the Meiji Restoration, remember the Meiji Restoration, I think was 1860, it was 1870. Let me just check that one too. Meiji Restoration was 1868, okay. So what that means is that up until what the Meiji Restoration was, the Japanese had closed themselves off basically to the world in the 17th century to preserve sort of the samurai system. The Dutch had been there, the Portuguese had been there, and they were forbidden to go. I think Martin Scorsese's new movie called Silence is about this. And there's, of course, the James Clavell novels, Shogun in particular, which are about the earlier period. Fascinating cultural imperatives that the Japanese did. Well, it lasted about 200 years, which is astonishing that you can only do it on an island, of course. I believe the Japanese actually outlawed guns. There were guns used by the warring shoguns in that period, and they basically confiscated all the guns, went back to feudalism, went back to the samurai system with those wonderful legendary blades from the Japanese sword makers. But by the 1850s and 1860s, Commodore Perry landing in, forcing the Japanese basically to open up in, I think, 1865. So the Japanese, as a government policy, adopted industrialism. If you count as 1870 as the beginning of Japanese industrialism from a feudal, non-industrial culture, in one generation, 1905, they defeated the Russians in the Russo-Japanese War using battleships, largely purchased from the British at that point. And in another 40 years, they were challenging the primary industrial power in the world, the United States, in the Second World War. So the Chinese have done it on a larger scale. But let's hope they don't take it to the extremes that the Japanese certainly did. At any rate, the upward trend in this chart begins around the time that the Chinese bring their economy to global trading capitalism. The interesting part here is, though, you get this decline here in, of course, 2008. This is a projection. It has actually been below this right here. See, unfortunately, this chart only goes to 2000. They're very, like I said, it's not easy to find good statistics on world trade. Not as easy as it is for other national statistics. So this actually has continued at a lower level. So it's not, this gap here is not of the most interest. What is interesting is that the slope of the lines has changed. This slope, based on this line back here, which is based on actuality, projected forward is here, but the slope of here, down here, so it's not only that you have this hiccup and then the world trade growth resumes at the same pace. It's not. It is resuming, and has resumed at a slower pace. One of the interesting things I just thought I'd mention is if anyone's been to Japan, I have not actually. In Japan, they drive on the left. Just about the rest of the entire world, except for, does anybody know what, I want to check one thing. I've not been to India either. I forgot, I want to put up the chart, the chat here so that I can get some comments from you all about this. So I'm now asking, does anyone know on what side of the road they drive in India? I don't want to take any more time from the webinar here to look it up. Obviously, British was the colonial power in India. In Japan, that would make sense if they drive. I believe in Australia and New Zealand, they drive on the left. My guess is they would drive on the left in India, but I don't know for sure. Japan was not colonized, of course. But when Japan adopted and started the Meiji Restoration and started industrialization, they wanted to copy at the time from the world's leading industrial power, which was, in 1870, Britain. And so in Japan, they drive on the left as well. And they do not drive on the left in Singapore, which was a British colony. Anyway, okay. So enough from that. Thank you. Thank you very much for that. So India drives on the left. Interesting. Not completely understandable, I guess. Okay. Thank you. That is appreciated. It also lets me know that people are listening, which is kind of cool. Okay, so back to this. So global trade has resumed, but at a slower pace. Okay, so I'm just going to go do one or two more things on global trade, and then we're going to go to the two specific topics that we have here today, because I find them fascinating, in fact. Okay, so let's take a long look at the Baltic Dry Index. Which is here. And you can see the striking fact about this chart is the period from here, from 2003 to 2008, that 5-year anomalous bubble. There is no way to characterize those years as anything else. Because as this is both an indicator of global trade, but more importantly, it is a market which finds itself out of balance and then gets back into balance. The historical level of the Baltic Index is down here, which is where it is now. So the anomalous bubble here is not particularly useful for us. What this mostly means now is that the supply and demand for shipping has resumed a more historical balance. So I think that this indicator is of less value, but it being one of the commonly quoted ones. See, the thing about this index is it's quoted on a daily basis. So you can approach it, and commentators do, as the same type of statistics that we get out of national economies. But it has, I think, less use than you might think. Okay. So let's look at some of the other indicators here so we can. Okay, now this one is of slightly less use, but I'll tell you what it is. This is a bit more polemical in that it was put together by an individual group. Okay, so we have world trade growth year over year in the blue. We have historical average, that's the median. You can see this is just about 5%. It's like the other one. And the other one we have is industrial confidence. Those are amassed from emerging market and OECD countries, and they're based on national indicators. And the signs that we're seeing here, I think are giving, and we've seen this in other charts as well, are telling you two things. This bubble, the prior bubble that we saw, the 2003 to 2008 bubble. This is, of course, the Reinhardt-Rogoff thesis that financial crises and their aftermath take far longer to heal for global economies, for national economies, than do normal cyclical, than the normal business cycle recessions from the rise and fall of demand, basically. And I think we're seeing that. The global growth post financial crisis and recession has been probably 40%, between 30 and 40% below trend. Well, if growth is below trend, certainly here in the United States, in Europe, China's growth has come crashing down. Japan is not growing, basically. So you have a real change in that the drivers of global growth are seriously underperforming. So that is going to produce, of course, because these trade volumes, these trade numbers are based on volume. So if you're only growing at 2%, you're going to be importing a whole lot less stuff, and everybody else is growing at 2% or less than they were. You're going to be importing and exporting a whole lot less stuff for volume. And that's going to show up in these statistics. Okay, so the basic fact that we've been dealing with here has been the change in global growth. Okay, we have this one here. All right, we're not going to do this. Let's get one more here. Did that one. Bear with me one second. Okay, here we go. Just one more. This is from the IMF World Trade Volumes of Goods and Services. It's a yearly number, and of course this port here, they didn't tell you that is projection, of course. Nonetheless, you can see the profound difference between, say, 1985 and post 2010. Remember, this spike here has a lot to do with that fall. The median has gone down dramatically. So two things are here. Now, global trade is not the driver. Global trade is the symptom. The drivers are the national economies. And that, of course, leads directly into our second topic today. There was no way to cover the other two topics that I'm going to spend the rest of the session on without covering the global trade topic first. But the global trade that you're seeing is an indicator. It's not a driver of what we're seeing here. Okay, now let's move on. Okay, that is... And we have sort of two drivers here. Now this is a bizarre chart. It's not really bizarre. Okay, two things are interesting about this chart. One is these numbers, U.S. trade balance with foreign countries. That's a trade deficit. Actually, no, that's not the one I want. Sorry. Hold on. This is the one I want. Okay, this is a trade deficit. U.S. trade deficit. And I'm using this as an indicator for what we're talking about here. Now, I remember back in my trading days, in the from about 1990 on, when this happened. It's not quite on this chart. When this happened right here. When the U.S. first brought its chart into, or its trade balance became permanently negative, as it has been now for a generation. It was a big shock. The trade numbers on Friday morning at 8:30 were like the non-farm payrolls used to be here, except there was a lot more volatility in the currencies. It was pretty wild. It was pretty tough. You'd go out on Thursday night, you know, all being young and, you know, much younger than we are now. You go out on Thursday night and then you'd roll in on Friday morning and you were not feeling too well and you had this monstrous number. And in those days, the traders made prices for the world. So you'd sit there anyway. It's only something you can do when you're 25 and 30, let me tell you. Anyway, so this is U.S. trade. This is what's happened over the past generation. This type of effect is what has led to the two topics of Brexit and the U.S.-China trade dispute. Now let's deal, we dealt with Brexit a little bit earlier, I'm going to do that again, but let's talk about what's going on here in the United States and whether or not this is a problem for world trade. And I'll tell you what my opinion is up front. My opinion is that it will be contentious, but it will not end up being a large problem. This is true, I think, and this is my view on both of the topics, both Brexit with the British and the European Union and US-China. The reason is both entities, or all four parties involved, the British and the European Union, United States and China, have every economic reason to continue their association even if the terms change. That the relationship is enormously beneficial to both sides. I think it's beneficial enough so that the terms of the agreement can be altered a great deal without damaging the overall economic benefits. I'm not saying it won't damage the political. And the second reason I think it continues is because none of the parties are in direct political confrontation. Certainly, there's no direct political confrontation, geographic, strategic, militarily, which is what we're talking about, between the Europeans and the British. The British may have fought 100 Years' War with France, but that was in the 15th century, the 13th, actually the 14th and 15th century. I don't see that conflict reviving itself. Now, of course, they'll say, whoa, did I miss 2 world wars? I did not. But I don't see any sign, even the emerging nationalism, if you will, using that term, in continental countries and in Britain, is not directed at their economic competitors on the other side of the channel. There's essentially no conflict between France and Germany. There's no real political military conflict brewing between England and everybody else or anything like that. So in that area, I think you can ignore that. I don't think it's going to happen. US and China, potentially there is more. But I think at the moment, at least, and I would say for the next 10 or 15 years, certainly the time frame of the pending Trump administration. And by the way, for those of you who do not know, on Friday, the United States House, yes, House, verified the election of an electoral college election of Donald Trump, and he will in fact be the next president of the United States. And anything else is silly misdirection and fantasy. So on January 20th, he will be sworn in, and he will in fact be the president from that point on. I don't know how closely these things were covered. It's a three-step process. You have the election, then the electoral college voters from each state vote, and then that electoral college vote is verified by the House of Representatives, which just did that work on Friday, although a few Democrats did object. Okay, so let's deal specifically with the British issue, the Brexit issue. It is my contention that although you keep hearing, and I know the pound went down again, it's my contention, I said at the beginning of the year, that by the end of the year, the pound will be the greatest revival story in the currency markets. We shall see. You can hold me to it at the end if I'm wrong. But what is pending on the European plate, political plate, this year? Well, the Netherlands are voting. France is voting, and very likely Italy will vote. Germany will vote. On all of these issues, the leading candidate, and not in Germany, Merkel I still think is probably pretty strong despite the disagreement and problems caused by her immigration policy, not only for her and Germany, but for the entire continent, because the way the Europeans with their Schengen zone, the way it works, that you get into Germany, you get in one place, you can go anywhere. The leading candidate in France is Marine Le Pen, one of the two. The other one is Francis Fillon of the center-right party. She is anti-EU and anti-Euro. In Italy, the Five-Star Movement, Beppe Grillo's movement, is anti-Euro and anti-EU by and large. And the same for Geert Wilders in the Netherlands. It seems like that poll, I think, is in that vote, I think, is in March. They have a parliamentary system. It seems likely, according to the polls right now, that Wilders' party, I hope I'm pronouncing it correctly, will win a plurality of the vote, although it's debatable whether or not he'll be able to form a government, because it would still be a minority, maybe around 25 or 30%. And the other parties will not work with him, and they're more likely to work together. And so he will probably not be prime minister. But it was completely expected by everyone, as we know, to repeat that Brexit would not pass, and that Donald Trump would go back to the Trump Tower, which he is not going to do. So it's very debatable whether we should be listening as hard as we are to all of our political prognosticators, since they seem to be very good at only one thing, and that's getting things wrong. And if I may say, not doing their job when it comes to actually going out there and finding out what people actually think. If we had done this in the United States, then perhaps this election would not have been such a surprise. And it should not have been, but it was. At any rate. So the Europeans have votes coming up, which even if Marine Le Pen and Geert Wilders do not win, and the Italians say don't vote, and Merkel gets reelected, it will be clear that a large section of their populace is unhappy with the economic structure as it relates to them specifically. Italy, as I said, hasn't grown since the euro started. Their unemployment rate for people under 30 is something like 40 or 50%. Astronomical. It's very high in France as well, I think not quite as high. You are selling out, essentially, an entire generation by economic policies that produce this type of unemployment, regardless of the social net that you have in any particular country. So for Brexit, if the Europeans are going to be the pro-European Europeans are going to be fighting at home against French and Italian and Netherlandish separatists as far as the EU goes, there is almost no point to their attempting to enforce a hardline Brexit on the British. So on that side, I don't think you're going to see, after the negotiations are finished and all the angst is done and all the rhetoric is finished, you're going to see a very large change in the British-European trade relationship. And I'm less sanguine, but I think along the same lines, I think we're going to see a similar type of non-event, despite all the copy it'll get, between the US and China. Both sides. Now, Donald Trump is attempting to change the terms of trade with China. And you hear a lot of talk about tariffs. To me, they're pointless, because he can attempt to do this and without resorting to tariffs. There can be changes in the US tax structure. Things can be done nationally. And tariffs, if you want to put them, can only affect US companies. You can do that. That will work to change. Now, what is he really talking about? Of course, he's talking about keeping jobs here in the United States, which is a economic benefit to the United States. The entire discussion over the past generation of trade, and I've mentioned this before, of trade between nations has been conducted entirely as an exegesis on economic equations. Everybody benefits because we get lower goods, lower cost goods. Whoever's manufacturing those goods gets wages, and on and on and on. But as I said, I've said this before, to my mind, this particular type of analysis is insufficient because it does not incorporate, and I know many people will disagree with me on this, it does not incorporate the social issues which, as we see, matter. Because in a democracy, which is what the United States is, these people vote. And they basically elected Donald Trump. So and I would say, frankly, that there's far more chance of a publicly contentious realignment of this issue between the United States and China, who are, in fact, political and military competitors. The difference between the two, between Britain and the EU and the United States and China, is that the British and the European Union are not political or military competitors. Their political, military, and competitors are farther east. It's the Russians primarily. But that's not true of the United States and China. So, and there are moves and things happening on the geopolitical sphere, in the geopolitical arena, that are potentially contentious and could become much worse, although I don't see them becoming any type of military confrontation anytime soon. Certainly they are competitors, and we are competitors in that field, in that arena. So the potential for the US-China relationship is more contentious. However, the levers on each side are profound. So I think the difference we're going to see here is this. I think you will continue to see for this year and probably next year real concerns about world trade. As I said, these concerns I think are based more in the fact that the economy of the world and the United States in particular and other places, the growth has been mediocre. We've had 2% here in the United States. Chinese growth is going down. The Europeans are essentially flat, a little bit more, and the Japanese are flat. So there isn't any area of growth, strong growth in the world to drive world trade. So the trade figures are reflections of national economies. However, the trade disputes are not. It is my guess that the European dispute will fade in significance because the Europeans are going to have far greater distractions at home, very likely. The US-China one, no. I think you're going to see that as a lively issue for at least a year. But I think it will be relatively easy to reach a conclusion, because a lot of the conclusion is not going to be directly between the United States and China. There's going to be a lot of rhetoric back and forth. But the Trump administration wants to have its effect on US corporations. That's its focus. Not so much whether or not the Chinese do something, but US corporations. That's where the threats will go. That's where the result is expected. And if you're going to rewrite the tax code, you do it to benefit US corporations. And so that particular issue will be far more homegrown, although the rhetoric will not be vis-a-vis the Chinese. Okay, folks, it's been an hour. I am surprised, but here it is. If we have any questions or comments, I hope this has been interesting. It's a little, as I said, a little esoteric because you are getting the international and the national together, and it becomes it becomes a little difficult to disentangle the trends. But I have tried. We will do this again next week as we do every Monday. I will put my email up there. I thank you all for attending. I hope it has been useful, and everyone have a really good day. Thanks so much, and Happy New Year to everybody.